lesson, believe it or not, for all you entrepreneurs on how you can lower your taxes and improve your overall financial stability. And yeah, I guess if I'm being honest, it's also an excuse for me to get out on a ride, and also, I guess, to share this whole beautiful view with you. But there are so many parallels between riding motorcycles and business and entrepreneurship. And one of my favorite ones that I wanted to share with you today is the concept that when you're riding a motorcycle, especially when you're riding off-road, though it's true always, you need to keep your eyes up and looking as far out as you can. So you don't want to be looking at these rocks that are, here close to you when you're there. You should have already processed those, and now you need to be looking as far out as you can see out there, because there are things out there that you might need to recognize that and think about now, so that by the time you get there, you're already prepared for it. And the same is 100% true in business, and particularly, what I want to talk about today is about tax. So we had a client who last year came to us, beginning April, May of last year. She is a business owner, owns a marketing agency, and had just filed her tax return with her old CPA and wasn't too happy about it. And she wanted to do some planning so that her 2021 taxes could be better. But she also knew that she wanted to buy a house, and she was planning ahead. So she had this long-term vision. She's looking way out there and knew that, ultimately we need to make sure that she's ready to buy a house. And in knowing that, there are several things we need to consider. First of all, we know that she's got to show enough income in the way that the mortgage broker wants to see it to be able to afford the house that she wants to buy. And her old CPA, was going to take care of that just fine. Okay, we can show this much income, but it was costing her like an extra $15,000 in tax. And because we were able to look far enough out, again, this is April of last year, that she was thinking ahead. Okay, I want to buy my house. And because we were able to plan for it, there are several things that we were able to do, including, some was just optimizing the income she already had. She was paying too much tax just on the income she had because she didn't have the right entity structure in place. But on top of that, there are several things that mortgage companies will actually add back that you can deduct and take as tax advantages for the IRS. And the specifics aren't really the point. The concept is, ultimately, she was able to achieve buying the house without paying that extra $15,000 in tax, because she was thinking about her taxes and planning for her taxes for the end of 2021 and the taxes she would ultimately not pay until April of 2022, just because she was thinking about those all the way back, in April, May of the previous year. So keeping that eye as far out as you can possibly see, that is the first step in tax planning. So many times we have people come to us in similar situations, except they're getting ready to file their 2021 tax return, their tax return already for that year. The year's already ended. And now our hands are really tied on what kind of tax planning we can do. That's that's just like having your eyes, instead of way out in front of you, having it, on this rock that's right there. And by the time you are at that rock, it's too late for you to do too much about it. And that's a concept that we just see over and over again. And the idea, again, is not really the specific strategies. That isn't the point. There are so many strategies that can be used to save taxes. Everything from making sure you have the right entity structure to, of course, making sure that all the deductions that you are legally entitled to, that you're actually taking advantage of them. And sometimes that means shifting some things around in your business in order to make something a legal deduction that wouldn't normally be. And, I guess then there are just a million other sort of wealth strategies. When you have a little extra cash, how do you use it? How do you allocate that? Do you use it in ways that are deductible and write-offs pre-tax, or do you pay tax first and then pay for all those things after tax? But all those things, it all starts with having a plan. And that whole plan starts with, what are the objectives? What do we see coming far out? Are you going to be selling your business? Because that's a whole different set of strategies that we need to use and look at to be sure that you're prepared maybe 2-3 years, maybe 5 years in advance of selling your business. And some of those strategies just are really hard to do or impossible to do when you're right up against it. And that's, I guess, the object lesson that I wanted to share. We are going to be having actually a webinar in a couple of weeks on the main tax strategies. So this is me giving you our framework for how you can reduce your taxes. And we're going to have a lot of strategies in there and just a lot of concepts also to keep in mind for how you as an entrepreneur, as a business owner, can reduce your taxes and set yourself up for more wealth in the future. I mean, just think about this client that I just talked to. She just bought her house and everything was great. She was able to use that $15,000 towards her down payment. I mean, she would have come up with another $15,000 if she hadn't had that, but then it would have had to been pulled from somewhere else, would have had been pulled from the business. And think about like that $15,000, the effect that it has when it can remain in the business and what your return on investment is on that $15,000. And just, over and over again, year and year, if you're sending an extra $5,000, $10,000 to the IRS, just because you're not thinking proactively about taxes, what kind of long-term impact does that have on your wealth versus the other side, thinking about if you could invest an additional $5,000 or $10,000 in your business instead of sending it to the IRS, what would be the cumulative effect of that years down the road? And so what we're going to be doing is sharing that framework with everybody on, what are the strategies, what are the pillars of tax planning and tax saving, so that you can then take that and understand, okay, what are my levers of control to be able to reduce my taxes in certain scenarios. So go ahead, we'll put a link here. Go ahead and register for that webinar if you're interested. And if you have any questions on any tax stuff, feel free to put it in the comments. We'll check all the comments and make sure that we're responding and getting